Canoo CEO says executive team is willing to take short-term pay cuts. Oklahoma pledged millions to EV startup Canoo. But now the company is fighting work furloughs and supplier lawsuits. Canoo reports $900,000 revenue for third quarter, net loss of $43 million. Exclusive, UK Royal Mail pilots Canoo delivery vans. Canoo CEO says executive team is willing to take short-term pay cuts. Electric vehicle maker Canoo published its third quarter earnings results on Wednesday, reporting cash and cash equivalents of $1.53 million, down 82% from the previous year. Revenue rose sequentially from $605,000 to $900,000, although the number of vehicles delivered between July and September remains unknown. In November 2022, Canoo announced it had secured $2 billion in customer orders, stating these orders were ready for the start of production scheduled for later that month. Loss from operations increased from about $48.8 million to $59.2 million, while total assets slightly decreased year-over-year to $523,289, from $542,005. In September, the company, led by Tony Aquila, withdrew its 2024 revenue guidance along with projections for its manufacturing run rate, vehicle production, and deliveries for 2024 and beyond. In a statement, Canoo CEO Tony Aquila said the company is grateful for the support of our customers, partners, their belief in us, and in our amazing product, before commenting on the recent measures to reduce cash burn. While we focus on our core markets, we must continue to take aggressive actions to consolidate our operations, reduce costs, and catch up to our plan. This starts from the top, led by a committed executive team, which is willing to take short-term pay cuts for long-term incentives and believes in the value we create for our customers, associates, and shareholders, the executive stated. Aquila calls the current phase a difficult and critical period and reiterates the ambition to get back on track with our step-level manufacturing plan. This will continue to be a difficult and critical period as we do everything we can to get the capital in place, bring jobs back online, and get back on track with our step-level manufacturing plan, Canoo CEO said. Canoo shares traded 10.5% higher less than an hour after the results were released, following a 15% drop at Wednesday's close. The company expects cash outflow to range between $30 million to $40 million, while adjusted EBITDA is forecasted to be between $30 million to $35 million. Earlier this month, the company reported that its chief financial officer, Greg Etheridge, and general counsel, Hector Ruiz, both resigned effective October 31st. Implied volatility data indicated earlier today that the market anticipates a move of approximately 21.6%, or 15 cents, following the release of results versus the median move over the past 8 quarters of 6.8%. The stock reached a new record low last week at 37 cents after the company announced that it is furloughing 30 factory workers in its Oklahoma plant until late January next year, as a timeline for mass production start remains unknown. Last week, the startup announced it entered into a $12 million secured revolving credit facility with AFV Management Advisors, LLC, an entity founded by the company's CEO Tony Aquila. Oklahoma pledged millions to EV startup Canoo. But now the company is fighting work furloughs and supplier lawsuits. The state has pushed back a deadline for the company to receive job creation money as the company struggles to ramp up production. State agencies purchased 3 Canoo cargo vans, but their use is limited. As Canoo Incorporated faced collection lawsuits and warned investors it might not stay in business, Oklahoma gave the electric vehicle maker $1 million in cash incentives for jobs it created in the state. Oklahoma has also pushed back a deadline for Canoo to receive more incentive money, allowing the company more time to meet hiring goals. Canoo received its first $1 million incentive payment from Oklahoma after it announced it had created over 100 new jobs in the state in January. The money came from Oklahoma's Quick Action Closing Fund, a pot of money intended for the governor to recruit new employers to the state. Oklahoma's incentives are all performance-based, meaning companies only receive payments for jobs and investment they have already created in the state, a spokesperson for the Oklahoma Department of Commerce said. Companies do not receive taxpayer dollars until they meet certain requirements, and safeguards are built into contracts that allow the state to claw back money if a company falls below its performance threshold, the agency said in a statement. It's unclear if recent worker furloughs at Canoo's Oklahoma City factory will require the company to repay any of the $1 million in state money. Strapped for cash, Canoo furloughed 30 Oklahoma City factory workers for 12 weeks at the end of October. The furloughs represent 23% of the company's factory workers, Canoo disclosed in a regulatory filing. Canoo's contract with the Oklahoma Department of Commerce requires the company to keep at least 80% of the workers it hired for a minimum of 18 months or face clawbacks. Department of Commerce officials recently toured Canoo's factory as part of a previously scheduled visit and have notified the company that it needs to meet the performance requirements in the contract, said Chase Horn, a spokesperson for the agency. Canoo did not respond to written questions about the furloughs or the status of its state incentives. The company is scheduled to report financial results for the third quarter of the year on Wednesday. The Department of Commerce gave the company more time to reach hiring goals to receive additional state incentive payments earlier this year. Canoo's 2023 Quick Action Closing Fund contract required the company to hire more than 350 people with an average annual wage of at least $60,512 by July 1st this year in order to get its next $2 million chunk of incentive money. But the company has been slow to ramp up production. The Department of Commerce signed a new deal with Canoo one day before the deadline, giving the company until July 2025 to meet the hiring goal for the incentives. It is the intention of the Oklahoma Department of Commerce to work with and support businesses to help find a means to success as a net benefit for the state and the company, a spokesperson for the Department of Commerce said about the revised incentive deal. It's the second time the Department of Commerce has reworked Canoo's Quick Action Closing Fund contract. Canoo was initially eligible for up to $15 million in Quick Action Closing Fund money, but the agency reduced the potential award to $7.5 million in 2023 after the company missed a deadline to start construction on a factory in Pryor. Canoo has also been hit with multiple collection lawsuits from vendors over the past year. The Frontier found 6 pending lawsuits filed against the company for past due bills in Oklahoma, California, and Michigan. 5 former employees told the Frontier that Canoo lacked parts to build vehicles because it didn't pay suppliers. Some workers didn't want to be named because they were concerned about future employment options, or said they had signed non-disclosure agreements with the company. Canoo warned investors that there was substantial doubt it would be able to continue operations in May 2022. Canoo CEO and Chairman Tony Aquila has been helping provide financing to keep the business going. The company secured a $12 million revolving line of credit with AFV Management Advisors LLC earlier this month, another company that Aquila runs. Along with millions in promised cash incentives, Oklahoma also awarded Canoo a contract to provide electric vehicles to state agencies in 2022. State agencies have purchased 3 vehicles so far for $39,950 apiece. The Office of Management and Enterprise Services uses its Canoo cargo van for maintenance operations at state office buildings around the Oklahoma Capitol. The agency has no current plans to purchase any additional Canoo vehicles, said Krista Helfrey, a spokesperson. Management and Enterprise Services said. The current cargo-style van, which only allows for 2 passengers, is proving to be resourceful for our current facilities management applications, but is somewhat limited for applications in other areas, Helfrey said in an email. A lack of charging stations has limited the use of the vehicles for 2 state agencies. The Oklahoma Department of Corrections initially used its Canoo to patrol the perimeter at a prison in Lexington. It provided a quiet ride and an excellent panoramic view for the officers patrolling the outside of our facility, Kay Thompson, a spokesperson for the Department of Corrections said in an email. But the agency eventually moved the vehicle to its administration building in Oklahoma City due to a lack of charging ports at the prison. The Department of Corrections now uses the Canoo for an IT team to transport computers and other tech equipment around the metro area, but has no plans to purchase more vehicles, Thompson said. The Oklahoma Department of Transportation uses its Canoo for public outreach and planning activities within an appropriate radius from the ODOT central offices, Jared Schwenneson, multimodal division manager for the agency said in an email. As we learn more about the vehicle's capabilities and range, we will be able to determine a suitable radius of operation around ODOT's headquarters to maximize the utilization of this zero-emission mode of transportation. Governor Kevin Stitt has been an outspoken supporter of providing Canoo with business incentives to create new jobs and diversify the state's economy. He praised the state's purchase of Canoo vehicles last year as a way to reduce government waste. As we find new efficiencies within the fleet, Canoo's new Oklahoma-made electric vehicles align perfectly with our fleet modernization goals, and I couldn't be more excited to see them on the roads, Stitt said in a December 2023 press release. Stitt's office did not respond to questions about Canoo's state incentives or vehicle contract. Even though Canoo has not yet turned a profit or started large-scale manufacturing, the company has said it plans to create more than 1,300 jobs in Oklahoma. The electric vehicle startup announced in 2023 that it had incentive deals with the state of Oklahoma and the Cherokee Nation worth more than a combined $110 million over the next decade. Oklahoma City has pledged another $1 million in job creation incentives. But $1 million from Oklahoma's Quick Action Closing Fund is the only state money the company has so far received. The Cherokee Nation and Oklahoma City both said they have not provided the company with any payments or other support. Canoo reports $900,000 revenue for third quarter, net loss of $43 million. Electric vehicle maker Canoo reported on Wednesday its third quarter earnings results, posting $900,000 of revenue, an increase from the $605,000 posted in the second quarter of the year and 73% higher than a year ago. Canoo said adjusted EBITDA for the third quarter was $43 million, down from $46 million in the third quarter of 2023. The company led by Tony Aquila withdrew its 2024 revenue guidance in September, along with projections for its manufacturing run rate, vehicle production, and deliveries for 2024 and beyond. Previously, Canoo had forecasted an annual revenue between $50 million and $100 million. We are grateful for the support of our customers, partners, their belief in us, and in our amazing product. While we focus on our core markets, we must continue to take aggressive actions to consolidate our operations, reduce costs, and catch up to our plan. This starts from the top, led by a committed executive team, which is willing to take short-term pay cuts for long-term incentives and believes in the value we create for our customers, associates, and shareholders, said Tony Aquila, Canoo's chief executive said. This will continue to be a difficult and critical period as we do everything we can to get the capital in place, bring jobs back online, and get back on track with our step-level manufacturing plan, he added. The company expects cash outflow to range between $30 million to $40 million, while adjusted EBITDA is forecasted to be between $30 million to $35 million. Earlier this month, the company reported that its chief financial officer, Greg Etheridge, and general counsel, Hector Ruiz, both resigned effective October 31st. Canoo shares traded 7% higher immediately following the results after closing 15% lower on Wednesday. Implied volatility data indicated earlier today that the market anticipates a move of approximately 21.6%, or 15 cents, following the release of results versus the median move over the past 8 quarters of 6.8%. As reported by EV earlier today, Fidelity's subsidiary Geode Capital Management has increased its stake in Canoo by 25.6% between July and September. The stock reached a new record low last week at 37 cents after the company announced that it is furloughing 30 factory workers in its Oklahoma plant until late January next year, as a timeline for mass production start remains unknown. In March, the Texas-based EV maker executed a 1-for-23 reverse stock split aiming to remain compliant with Nasdaq's listing requirements. As exclusively reported by EV on Tuesday, the UK's largest electric fleet operator, Royal Mail, has started piloting Canoo's electric delivery vehicles. The pilots with the British Postal Company began earlier this month as Royal Mail aims to further electrify its fleet of over 43,000 delivery vehicles. Last month, Canoo said it received Individual Vehicle Approval (IVA) regulatory certification in the UK, confirming that its right-hand drive electric commercial vans meet the national technical requirements. Last week, the startup announced it entered into a $12 million secured revolving credit facility with AFV Management Advisors, LLC, an entity founded by the company's CEO Tony Aquila. 2 years ago, in November 2022, Canoo said it had acquired $2 billion in customer orders, claiming they were ready for the start of production set for later that month. Exclusive, UK Royal Mail pilots Canoo delivery vans. Royal Mail, the UK's largest electric fleet operator with 5,000 electric vans, has begun piloting electric delivery vehicles from Canoo, the Texas-based EV startup. The pilots with the British Postal Company began earlier this month as Royal Mail aims to further electrify its fleet of over 43,000 delivery vehicles. The company announced in July that it would add 2,100 new electric vans to its fleet over the next year, increasing the total by almost half to more than 7,000. 2 weeks ago, the Stellantis-owned brand Peugeot revealed that it will supply the vehicles, including over 1,000 British-built EPART and ERS. The Stellantis brand has supplied Royal Mail with vehicles since 2009 and electric vans since 2014. The company aims for 100% of its delivery vehicles to be zero-emission by 2035 and 100% of its company cars to be zero-emission by 2030, supporting its ambition to achieve net zero by 2040. Last month, Canoo said it received Individual Vehicle Approval (IVA) regulatory certification in the UK, confirming that its right-hand drive electric commercial vans meet the national technical requirements. In September, Canoo's former CFO Greg Etheridge revealed in a webinar that the company expects to have vehicles in the UK and pilot with them by the end of the year. The EV maker is expanding its operations to the United Kingdom and has recently established a customer and activation center in Bistermotion. Greg Etheridge, the company's former CFO, has recently noted that the pilots do not require a big investment. They allow the company to start building relationships with the largest fleets in these markets. Tony Aquila, the chief executive, highlighted the UK's high-potential market that provides incentives, including the plug-in van grant, PIVG. We've been able to enter into two very respectable and supportive markets, the UK and Saudi Arabia. The CFO stated before saying that Canoo is focused on large commercial fleets such as USPS and Walmart. Shares of electric vehicle maker Canoo rose 33% on Monday and surged another 10% in Tuesday's pre-market trading session to 77 cents. Walmart has opted to integrate Chevrolet BrightDrop 400 electric vans into its last-mile delivery fleet, deviating from an agreement from 2022 with electric vehicle maker Canoo to purchase thousands of Canoo's electric delivery vehicles. In July 2022, Walmart announced a definitive agreement with Canoo to acquire 4,500 of its all-electric lifestyle delivery vehicles, LDVs, with an option to increase the order to 10,000 units. Since the record low reached on November 4th, the stock has surged 52%. The stock reached a new record low last week at 37 cents after the company announced that it is furloughing 30 factory workers in its Oklahoma plant until late January next year, as a timeline for mass production start remains unknown. Last week, the startup announced it entered into a $12 million secured revolving credit facility with AFV Management Advisors, LLC, an entity founded by the company's CEO. 2 years ago, in November 2022, Canoo said it had acquired $2 billion in customer orders, claiming they were ready for the start of production set for later that month. Canoo first cautioned investors in 2022 that it had substantial doubt about continuing as a going concern and has since been raising capital to support production.